Asia. Now, it is episode 404, and it is a pretty jam-packed one as well. So we've got a few things going on, but firstly, just a quick introduction. So this currency call is aired every Monday to Friday at 11 a.m. GMT plus 8, and the currencies we analyze are as follows. Mondays, we do the Aussie and Kiwi. Euro is for today, for Tuesday. Wednesday, the pound. Thursday, yen and gold. And then Friday, CAD and crypto. And this currency call is where you'll get the market economic updates. You'll get the explanations as well for the key data points to pay attention to for trading opportunities as well. You'll get the key support and resistance levels, trade ideas, and of course, much more. And this currency call will be very beneficial to both the long-term investors and also the short-term traders. And here we will go through what could move prices, the possible trade ideas, and we'll also highlight the potential targets and risks as well in regards to stop loss placements and take profits. A disclaimer as well is that any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades as well. And feel free to ask questions, whether it's in this chat within the Zoom call and also in the LCMS Traders Club as well. So for today, just to kick us off here, guys, we do have Kim Hong, currency strategist at LCMS Traders, and he'll be discussing the upcoming Bank of Canada interest rate decision, which is tomorrow. So definitely something worth listening to. And thanks again, Kim. The mic is all yours.
All right. Thank you, Scott. Okay, there seems to be some construction work going around my area right now. So if you guys, get distracted by any of the noise, can't hear what I've said, or just want me to repeat, just type in the chat and I'll just repeat whatever I need to repeat. All right?
It's okay. We hear you nice and clear.
Really?
We're all focused. We're 100% focused. We don't hear anything else but your voice.
Awesome. Okay. Now, Bank of Canada. Okay. So they will be meeting tomorrow, okay, at 2200 GMT plus 8. So what can we expect from them? Okay. So I think last week, was it last week or earlier this week? I think it was last week. Jean actually prompted me on, what to expect. So, yep, like I mentioned last week, we can actually expect a reduction in QE, okay, or a QE tapering from the Bank of Canada. All right. So at the moment, quantitative easing in the in Canada, okay, is actually running at, I think, 2 billion Canadian dollars per week. All right. So we can actually expect them to taper QE down to 1 billion Canadian dollars per week. All right. Now, why is that the case? 3 reasons. First one, positive COVID situation. Okay. As you guys know, that Delta case, the whole Delta variant issue actually hit everywhere, okay, and caused a spike in cases back in, I think, late June, all right, and then, moving on into the third quarter, all right. But in Canada, okay, Delta cases has peaked in mid-September, all right, and since, I think, start of October, okay, it has been declining, okay, so that's one thing. Second thing, high vaccination rate, all right. In Canada right now, I think 73% of the population are actually fully vaccinated, and 77% have received at least 1 dose. Okay, so with this whole speedy vaccination program, and obviously you can see the impact on the number of cases. Okay, it has already started declining. That will actually lead to more easing of COVID restrictions across Canada. Okay, and hence the Canadian economy can open up and pick up faster than ever. Okay, so positive COVID situation is the first reason. Okay, second reason, positive job market situation. Okay, so employment figure, okay, based on the most recent jobs report, Canadian jobs report, okay, employment figure has already returned to pre-pandemic level. Okay, meaning the number of jobs that's been lost to the pandemic, okay, all this time has been recovered. Good thing, okay? And unemployment rate at the moment, okay, is at the lowest since the pandemic started, okay, in Canada, okay? So yeah, overall, strong jobs market situation will definitely lead to the resumption of more people going back to work. Online classes will be converted back to in-person classes being held and things like that. Okay, so that's the second reason why the Bank of Canada is likely going to reduce QE. Okay, and the third reason is because of inflation pressure. Okay, so the most recent CPI data, okay, actually show that annual inflation in Canada hit a 18-year high level of 4.4%. Okay, so I think previously it was back in August. Yeah, back in August, I think it was 4.1%. Okay, annual inflation, not monthly, annual inflation. Okay, it was 4.1%, and then in September it just climbed higher to a 4.4%. Okay, so inflation pressure, prices going higher and higher, that will definitely prompt the Bank of Canada to carry out some form of an action. Okay, so what impact is it going to have on the Canadian dollar? Okay, so if a tapering were to be carried out by the Bank of Canada tomorrow, it is likely going to cause a strengthening in the Canadian dollar. All right, but I have to warn you guys at this point, all right, because the Canadian economy has been doing well previously for the previous months. That actually led to the market's expectation that a tapering is nothing surprising. Okay, it's not going to be a surprise that the Bank of Canada will be carrying out a tapering this time around, or during the next one or two monetary policy meeting. Okay, so which is why the Canadian dollar may strengthen, but personally I feel that the strength is not going to be like a it's not going to be very strong. Okay, it's not going to be like a strong shoot up and then carry on forever and things like that. No, not forever, but carry on for a sustained period of time. Okay, unlikely going to be the case. Okay, so we may just see a brief strengthening in the Canadian dollar. Okay, then that's pretty much it. Okay, so other than the tapering that is expected from the Bank of Canada, okay, also pay attention to any mentioning of the rate hikes in 2022. Okay, at the moment, maybe too early to talk about rate hike. Okay, as for 2021, okay, but for 2022, will there be any mentioning of rate hikes and things like that? That's what we want to pay attention to. Okay, so yeah, just pay attention to the rate statement. Okay, and of course the press conference. There will be a press conference at 2300 GMT +8. Okay, so just pay attention to any mentioning of potential rate hikes in 2022. Okay, of course, the market is also expecting rate hikes to be carried out. I think there's some expectation of 3 rate hikes to be carried out during the second half of 2022. Okay, but yeah, that's rate hike. Now, another thing I would like to bring your attention to is this. Okay, so what you guys are looking at right now is the previous statement, rate statement, back in September 8th. All right. Let me show you guys this line over here. Is this the one? Yes, I think this is the one. Okay, so over here, okay, it says that we remain committed to holding the policy interest rates at the effective lower bound, which is the current rate, okay, until economic slack is absorbed, so that the 2% inflation target is sustainably achieved. Okay, in the bank's July projection, this happens in the second half of 2022. Okay, so that is back in September. Okay, then I think it was earlier on this month, probably like a couple of weeks ago, that the governor, Bank of Canada Governor Keith McCallum, actually spoke in a speech. Look at that smile. Okay, that is a tapering smile. All right, chances are we're going to see a tapering this time around. Okay, so in his speech, he actually mentioned this, short and sweet. Global supply chain bottlenecks are not easing as quickly as expected. Okay, meaning inflation in Canada and among IMF members will probably take a little longer to come down. Okay, so, okay, if inflation may take a little longer to come down, okay, and back in September's meeting, the Bank of Canada actually mentioned that, you know, in order for the inflation, 2% inflation target to be met sustainably, okay, to be achieved sustainably, it's probably going to take place in second half of 2022. Now, what we want to pay attention to is, will there be a revision to this second half of 2022 being quoted in the statement? Okay, so I mean, of course, back in September, you know, the central bank probably didn't expect that much, right? But then right now, Keith Macklin came out and, you know, speak that, saying that, you know, we are expecting inflation not to come down anytime soon. All right. So if they were to actually carry forward the whole second half of 2022 expectation to earlier, I don't know, to an earlier timeline, maybe like first half of 2022 or second quarter of 2022, okay, then this will actually send a hawkish tone, all right, a hawkish tone to the public, all right. Then if that's the case, we may actually see the Canadian dollar strengthen and of course be more, I would say, sustained, to have more sustained strength in terms of, yeah, the price movements for tomorrow, okay. So several things to take note of, okay. First thing, tapering. If they were to taper, that's good, okay? But we are going to see, we are probably going to just see a brief strengthening in the Canadian dollar for a short period of time. Now, if they were not to taper, then that's another thing, all right? We may actually see a weakening in Canadian dollar, okay? Because like what I've mentioned, the market is expecting the Bank of Canada to taper. But if they were not to taper, then yeah, we may see a weakening in Canadian dollar, okay? So first thing, tapering. Second thing to take note is, yeah, the statement, you know, will they be mentioning any further, will they be dropping any further hints on interest rate hike in 2022? Okay, so that's the second point to take note. Third point being the second half of 2022 expectation of inflation being sustainably achieved. Okay, if they are going to remain at second half of 2022, then fine, you know, nothing's going to change much, all right? But if they were to actually adjust this second half of 2022 to a timeline that's earlier, okay, given that Keith Macklin has just mentioned recently that inflation is unlikely going to come down anytime soon, okay, and you know, it's actually taking a longer than expected time for inflation to tone down, then we may see a longer lasting strengthening in the Canadian dollar, okay. So these three points are the, you know, are the main ones to take note of for tomorrow's meeting. And yeah, because of the press conference, you know, prices being moved during the release of the statement may not be that lasting, okay, because the statement may not be covering much in terms of, let's say, you know, interest rate and things like that, okay. So during the press conference, okay, Keith Macklin, okay, the governor, may actually be prompted on his expectation on interest rate hike for 2022. So during that time, we may actually be seeing Canadian dollar moving up and down like nobody's business. Okay, basically volatility is what we will be getting. Okay, we can expect during the press conference at 2300 GMT plus 8. Okay, so let me see if there's any questions. Oh, quite a lot of activity. The price in, yeah.
How awesome you sound.
Sorry?
We're just talking about how awesome you sound.
Really? How awesome I sound?
Yeah.
Yes, I can hear that. I was about to say Okay, no questions at the moment. But yeah, if you guys have any questions, just post it in the Ecofin platform. All right, Traders Club platform, and yep, we'll just carry on our discussion from there. Okay, with that, I'll hand it back to Scott.
All right, thanks for that, Kim Hong. And just before one of our astute listeners or students ask, could I get you to post the link for that site you're at as well for the Bank of Canada? I'm sure Imran or one of our star students will ask about that. So, and we'll also, I'll make sure that's shared in the Ecofin chat as well.
No problem.
And all right, so guys, it's hard to back up from that, but I will now go to the US dollar, and it's been an interesting situation with the US dollar index as well. So I've got just a 4-hour time frame to start, just to have a bit of a just a backtrack on what we've seen, and it has been, there's been several attempts at breaking lower, and I mentioned this, and there wasn't a lot of news to back this up. It was more of a technical move higher with really what we saw was that equity markets moved higher as well. We had earnings out. We've got a lot of earnings out this week. We actually saw Tesla hit $1,000 a share. In reality, that's $5,000 per share because of the stock split. What that means simply is that a stock like Tesla, to get to that in this environment currently, is really bizarre because we've got this strain on the inflation metrics that the Federal Reserve use, and it's a high beta stock, which means that normally you won't see a lot of inflows in the lead up to what everyone speculates is that there's going to be an interest rate move higher in the US sooner rather than later. But, and that even Michael Burry got caught out on that. We see the US dollar bounce. But interestingly, really the main point to watch for it with this US dollar move is the euro weakness. The Aussie dollar's actually held up quite well. We haven't gone into that trade officially yet. We called 75.20 on the long, so watch for that. And the Kiwi did get to the entry point, no entry on that either. Really, the euro has been the one that's responded the cleanest in regards to its weak, and the US dollar is showing some strength here. What I'd watch for this now, let's go 1 hour. I'll zoom in a little bit, is that currently recent highs are up in the 93.90s, recent high 93.93. And what I'd like to see is that it has to break that, and really it's 94. Now, the thing is, though, we have an interesting situation with now what's the catalyst that's present. So I'm going to go to the news here and just have a look at what has been going on. Now, this is the economic calendar thanks to Forex Trading Asia, and I'm just going to go down here. So today is Tuesday. We do have the CB consumer confidence. I mentioned this yesterday because there wasn't really a lot to talk about for yesterday. The higher oil price was something, and there were definitely opportunities when the euro did bounce. In fact, Jin went into that at the start of the call last night in regards to the actual trades that were taken. So something really worth checking out if you didn't catch the call last night. That's for LCMS Traders Club members only. So I'll share the link to join in the club as well. And we've also got for tomorrow, just something to look out for. We do have the core durable goods out. It's going to be an interesting one just to see. But frankly, it just looks like there's been a lot of buying that's found, because when you see something fail several times like that, it normally means that sellers start getting a little tight. I didn't expect the bounce to be so dramatic though. And if I go back to the chart, I just want to quickly, from a trading perspective, I'm in a bit of a dilemma really, because we don't have the upside. We do have a lot of resistance at 94 as well. It's a bit of a psychological level, and it's flipped on what the thesis has been. So I'm going to be a little cautious. And I did get into, personally, I got into an Aussie buy trade. That was early on this morning. So we'll just see what happens here. But from a trading perspective, it has broken out. But I'm just going to wait and see what this US session brings later. I typically don't really like to get into trades in the Asian session. We did see the Aussie markets move a little higher too, but I really do think that I'd prefer to wait for a bit of a pullback back to the 70s, where we've seen some buying support previously, and then see what the price action offers. So currently no trade on the index here. And with the news, it's just not really that exciting. So you've just got to really pay attention to what's going on with the chart as well, and focus on the very best setups is the advice I would say. But in regards to the US dollar, the euro has been offering some pretty nice trading opportunities. It's rolling over again as well. Now, there is a bit of activity in the chat as well. We've got Mary. Yeah, that will be up, Mary, on the ECOFIN as well. And thank you, Gim Hong, for sharing that. The noise wasn't that bad. It just sounded like there were ghosts in the background, Gim Hong, or maybe some shadow people, your friends, the shadow people. All right, so that's it from me, guys. And going on now, we've got Jin here just to go through what's happening with the euro and any other insights that he's seeing as well in the market. So over to you now, Jin.
All right, thanks for that, Scott. So today being Tuesday, talking about the euro dollar and the euro pound, I think should be quite straightforward for the euro and the euro pound, actually, looking at the way the news is coming out with the Forex Trading Asia economic calendar here. Today being, where is it? Today being Tuesday, we do have some news, but these are not big price movers, as I was sharing with you yesterday. Wednesday, we do have some US durable goods numbers to be released, looking like it might be a mixed bag, but I think on Wednesday, the focus should be on the Canadian dollar. On Thursday, we do have where you start focusing on the euro dollar, the German unemployment numbers, the interest rate decision, monetary policy statement, and the rates at minus 0.5%. In this scenario, I think that on Thursday evening, we're likely to see not a lot of big changes coming around from the ECB. Rates are not going to change. They are probably going to adopt a little bit more of a wait and see scenario at this point. But the thing that you want to pay a bit more attention to will be the US GDP number to be released at 8:30 as well. Was quarter on quarter was a 6.7, expected a 2.7, so a drop in a quarter to quarter GDP number. We've been talking about this through yesterday and even last night during the session. The possible weakness in the dollar later into the week, and then also with the press conference from President or Chair Lagarde for the ECB. With all that put together, I think what we might see looking at Friday as well, some numbers coming from the Eurozone, but it's mostly the French data, economic data to be released. So I don't think we're going to see a big move there. Individual GDP numbers for the Euro countries, again, not big. What you're going to pay attention to is on Friday at about 5 o'clock GMT +8. We do have the CPI numbers. You can see year on year looking like it's going to be a lot higher, from a 3.4 expected to be a 3.7. We're looking at, and I think Chair Lagarde has also said that inflation for the Eurozone is probably gone past transitory, is probably looking like a longer term high inflation there. So we might see that 3.7 or even the 3.8, which will not be a good thing, which might also trigger further tapering talk, or trying to slow down that inflation, which we actually did see happen for the UK and also for Australia. Coming out for Australia in the inflationary numbers on Wednesday, we are expecting some drop from 3.8 to a 3.1. So at this point, I think that we might see that drop for the Eurozone, probably not this time, but maybe the next one, where we might see it drop to about a 3.5 maybe. Okay, so with that, what that all means in terms of on the charts is here for the Eurozone, it is right now sitting at this 1.16 level. It's sitting at this 1.16 level. The prudent thing to do, to think about, is that with the way we look at the dollar index, probably strengthening a little bit until later into the week, where we might see some weakness coming back into play. the euro dollar, I think that we could actually be looking for that downward move. I'm not sure whether it'll hit all the way down to 1.1530, but you could be looking for selling opportunities, especially when this candle closes below 1.16. So let's say about 1.1592, you could be looking at a tight stop loss, about 20-30 pips at the most. For a good 60 pip take profit level, you're looking at a 1:2 risk reward ratio towards the downside for the euro dollar. This is on the H4 time frame. So let that candle close. You could be looking for that selling opportunity towards the downside. For club members, we were talking quite in detail about the euro dollar last night. We were looking at H1 time frame, that being outside Bollinger was a good indication that we saw that bounce back up, but I do think that we might see the trend resume towards the downside. And as we expect the euro dollar to be dropping towards the downside, what this could mean for the euro pound is that I'm waiting to see whether it will break below 8.4. I'll zoom in one, okay. I'm waiting to see whether it will break below 8.421. The euro dollar dropping could drag the euro pound down. And if it does break below 8.421, I'll move that line down so that it's a bit clearer. It needs to go below 8.419 before you look for any selling opportunities. And as we were talking about last night, for it to drop below that point, to be super safe, you're looking at about below 8.400. You could be looking at a 60 pip take profit level for about a 30 pip stop loss. Again, 30 to 60, a 1:2 risk reward ratio. Be very careful about the euro pound here, particularly because as I look into the daily time frame, I zoom out on a daily, you can see that it's been a very long time since we got to this level. If I looked at it on the weekly, just to make it a bit easier to see, the last time we got to this point was in Feb 2020, and again in December 2019. And once it broke past that 8.419 level, if it did break past the 8.419, it would very quickly come towards 8.316 and bounce straight back, hit 8.316 again and bounce straight back. So if it does break below that point, I do think that we might see 8.316, but I don't think it'll be there for a long time. I think it'll come down, hit that level, and then bounce straight back up. So be very careful if the euro pound does break below 8.419. A lot of good downside potential, but because it is such a low point, a multi-year low point, expect a lot more volatility from this level and possibly even that big bounce back. To trade the euro pound, you not only have to pay attention to the euro dollar with that potential downside, you also need to be looking into the pound dollar. Pound dollar currently sitting at that 1.3747 level. Traders Club members, you already know what my view is for the pound dollar. If you're not already a club member, then tune back in, either join the club, the link is there, or tune back in tomorrow when I tell you more about the pound dollar, the news, and where I think it could be heading towards in the medium term. With that, I'll pass it back to you, Scott.
Thanks for that, Jin. And I've just shared the link there for anyone that is looking to get into the LCMS Traders Club. Now, in regards to the trade ideas that we do share as well, I strongly recommend you do watch the actual replay as well. So if you're just in the Traders Club and you've seen that we do post the actual trade ideas, so you don't need to watch the video, you really do need to actually watch the video though to get a full context of the actual situation and the trading dynamics, because like Jin mentioned with the euro pound, there's a lot more going on than just simply following it. That's why we do obviously put the disclaimer in as well. So please, we do share the timestamps as well So we really do take care of you guys about, not wasting your time, because we know everyone's busy, but please watch the actual designated segment. It's extremely important because you'll get an understanding, and that will help create some confidence into the actual rationale behind taking the trade as well. So thanks again for the contributions as well, and the questions. We'll make sure that last night's video is up, but really try and make the calls on Monday and Wednesday as well. All right, but that's it, guys. Thanks for joining.